Good afternoon. This is Rich Nelson with Allendale, covering the rapid commodity comments here. Today is Wednesday. This is October 20th of 2010. As far as outside markets, did see them reverse themselves completely here. The idea here, U.S. dollar last trade down 105. That reverses all those losses here from yesterday. Crude oil up $2.28. So that type of reversal certainly had quite a few people shrugging their heads, wondering what the heck happened. Well, key thing here we can point out is that yesterday's excitement based on the China interest rate decision certainly was overblown. We have to consider this fact here that China right now actually is an expanding economy. They're not involved with the recession that we are having here. The only thing that this news on as far as interest rate decision will do for these guys is maybe lower their growth from a massive 10% annual to maybe 9%, maybe 8.9%. So the point is, China is still expanding. They're not going to slow down their buying of corn or soybeans or their usage of or the demand here for pork or anything like that, based on this interest rate decision here. So it's good to see the market realize that this is not going to be a long-term problem and actually bring negative growth. It's just going to limit it's going to slow their massive growth that's already going on here. Over in the grains, we saw corn reverse itself completely, up 26.5 cents. At one point, it even touched the limit up here, so traders certainly got back into the corn very aggressively here today. Soybeans up 33 here in the close. This was new highs for that November contract and also for this uptrend. One thing we can point out here is kind of more or less what led this rally this morning was China buying an additional 180,000 tons of U.S. soybeans. This is now 6 days in a row. What came out here, what kind of convinced people that maybe this China thing from yesterday was overblown is if China's going to have some problems with this interest rate decision and possibly have some currency moves and limit their purchases of U.S. soybeans, well, they would have stopped buying. And obviously they did not. They bought 180,000 tons overnight. This is going to be a massive sale here, not on tomorrow's report. Keep in mind, tomorrow's report is only good for sales through last Thursday. But the week after, so the next Thursday's report is going to be fantastic because that'll cover sales from last Friday up into the Thursday time frame of this week. So bottom line is the market realized, oh, wow, we're overblown here. We overblew this whole negative situation from China. We're back on the track for some bullish market again here. Wheat up 10.5 cents here. What kind of held wheat back here today was a simple fact that rains are still expected to come here for the plains and a good chunk of the soft red winter wheat areas in the Midwest. So bottom line for grains, so we're back on track for this uptrend and for getting people excited about tight supplies for corn. Over in the livestock, kind of a strange day here to speak of. As far as the hogs, we started out the day on a very negative concern here. The fact that the pork cutout dropped $2.46 overnight on Tuesday. That's a large drop. So with that in mind, with cash hogs still pushing steady to $1 lower, people still saying cash hogs are going to be breaking through early next week, how the heck did futures manage to actually close a little higher here today? So that's simply one thing that the trade was looking at. One thing we're pointing out is based on our studies, which are looking at the futures for the time frame for December 14th, when these futures expire, things might not be as bad as they are right now. Right now, we do have a very large situation, a very problematic situation with supplies, meaning extra hogs coming down the front door, and they are all weighing at much higher than expected weights here. So we have a near-term bearish situation, but the trade is saying, wow, will this last by December? And maybe it quite won't here. So maybe one suggestion why we saw the futures do what they did here today. Over in the cattle, we've got nothing but great news to speak of here for the cattle. Midday beef was up 169 and 105 for choice and select respectively. Also, we saw cash cattle jump out of the gate here today. I haven't seen one of these days here for weeks, if not actually months. Quite a big deal for cash cattle today. Last week they traded 97 to 97.5. Today they traded anywhere from 101 to 102.5. So a $5 jump in live-based cash cattle. At this point, I don't quite know why these guys went so aggressive. As we noted in the morning comments, we did expect to see about a $2 jump based on the gains we've seen in wholesale pork or wholesale beef prices this week. So certainly we expected to have a bullish information in front of us here. But the fact that we had a $5 jump in live-based cash, That's not unheard of, but it's very unusual. Big deal for us on the cattle side. One thing kind of almost same situation with the hogs, but why didn't the futures react that much here today? We saw December, in fact, have a last trade up 60 cents. That's a very mild gain here for such a big jump in cash cattle. Key thing right now is maybe this trade feels that this lower 100s, this 100 to 102 area, maybe that's going to slow things down. Maybe that's the price we need to be at, and maybe we're going to be sticking at this price here for at least a few more weeks here. As far as reports out on Friday, we've got cattle on feed. At this point, placements 102.1. So the trade is expecting 2.1% more cattle to be put into feedlots during the month of September here. Bottom line is, as we said in the comments before, corn costs, at least during September, weren't a problem. I would certainly guess that October placements are going to see a small drop here based on this high corn cost issue we have right now. So the bottom line for today, this was a very important day in making sure people solidify their opinions on these markets, meaning grains are back on track for their tight supply situation led by corn and possibly led by beans based on these Chinese buying. As far as the hogs, it was important to see that we saw a large negative information for the short-term news, but futures actually stabilized here today. And for cattle, it was great to see that cash cattle traded up $5 today. We're still confirmed that we're seeing more to go. We still have our upside targets laid out, which you can certainly get a hold of here by checking out our research. That's at Allendale-Inc.com, or simply calling one of our brokers, open an account. We'd be happy to talk with you about our very bullish upside objectives here for cattle. So if you have any questions about those, you can certainly give us a call here, 1-800-262-7538. Last thing on the list here, we've got this conference coming out in January. This is a internationally attended conference. It's held here in the just on the edge of the Chicago suburbs. We're going to expect to see some very large turnout numbers this year, certainly for the type of scenario that we're going to lay out for our 2011 outlook. So get a hold of that. Get a hold of us for our short-term research. Take a look at us for our long-term issues on this conference, and certainly you will not be disappointed at all. Like I said, 1-800-262-7538. This is Rich Nelson. Hope you have a good trading day and a good trading week.